you've been paying attention to the market recently, you know not long ago there was mayhem prompted by the New York Stock Exchange, which is a popular exchange that lists many auctions. 15 seconds into the trading day, many different equities were trading haywire, and then they just stopped. Everything was halted and a lot of confusion. Apparently, we figured out what happened. Here's the TLDR of the situation. New York Stock Exchange mayhem traced to a staffer who left a backup system running. So they're saying human error. More than 700 miles from Wall Street, the New York Stock Exchange backup data center on Cermak Road in Chicago is supposed to safeguard U.S. markets, standing at all hours in case disaster ever strikes the world's largest venue for trading shares. So apparently an issue in their backup system supposed to stop things from going haywire, but it caused things to go haywire. I'm sure you understand. When markets are closed, it participates in a well-worn routine with New York Stock Exchange staffers turning on and off systems to ensure everything works. But heading into Tuesday, a New York Stock Exchange employee failed to properly shut down the disaster recovery system, leading to a disaster. The human error is what triggered wild market swings when trading opened Tuesday morning in Manhattan. The chaos affected more than 250 companies, in some cases sending stock prices swinging by 25 percentage points in a matter of minutes, actually seconds. The episode has prompted the exchange to cancel thousands of trades at a cost that's still being determined. So this is a process referred to as busting trades. So the things that were bought and sold, any trades made in that window, they're canceled, and the New York Stock Exchange is going to have to pay for that. Meanwhile, market professionals and day traders are rattled and waiting for the exchange to elaborate on what it publicly called a manual error involving its disaster recovery configuration. They're going to need to come up with something better. Those systems fail, and we understand that there's zero tolerance when it comes to opening and the close. The turmoil resulted because the backup system was left running. This led the exchange's computers to treat the 9:30 a.m. opening bell as a continuation of trading, and so they skip the day's opening auctions that neatly sets up initial prices. So to make that make a little bit more sense, there is something special about the opening. It's literally referred to as the open auction, but this time it was treated as just a continuation, like almost like pick a random midday minute in the trading market to the next minute. So it thought that the new prices were like a jump in the normal day, and it prompted all these circuit breaker halts, when in reality, it wasn't treating it like the open auction that it should have. Without that routine step, order flowed through at prices all over the place that soon tripped circuit breakers designed to prevent violent market swings, setting off alarms on screens across the investing world. And here's what Bloomberg has to say about it.
In terms of the New York Stock Exchange trading snafu from a couple days ago, Bloomberg has learned that the NYSE, the mayhem there has been traced now to an employee who left a backup system running. That mistake triggered wild market swings involving more than 250 companies. Bloomberg's Danny Berger joins us now with the latest on how the disaster recovery system caused a disaster itself. Danny?
That is really some good irony. Look, this is a fantastic scoop here from Catherine Doherty and the rest of the team in New York. And essentially, there is this system, as you say, it's in Chicago, and it should be shut off and turned back on. For whatever reason, an employee there didn't properly turn it off.
Turn it off and on again, please.
The system thinks that trading has just been running, so come 9:30, it just treats it like an extension of the trading day instead of saying, okay, trading is just about to start, we do the morning auction. Therefore, that morning auction simply does not happen. What does that mean? It means that this usually huge upswell of liquidity that happens in that morning auction isn't there. So anyone placing orders during this time is trading into a really illiquid market. It means that even if you just trade, let's say, 500 shares, it can mean that prices swing really wildly, and ultimately the result is you perhaps lost or, even made a lot of money.
Danny, what happens next on this one then? Because, we've seen a number of more than 1,300 trades and some 84 stocks were impacted. Some of that's being cancelled.
It certainly is. And there might be some financial repercussions of this as well for the NYSE. They do set aside $500,000 per month to deal with different issues. Not this one specifically. I think this is one they probably didn't exactly see coming. But yeah, so they'll probably cancel some trades. But for the rest, for folks who have lost money and didn't have their trades canceled, they have filed some complaints. Again, it's not really clear how much money the NYSE will owe. Even Schwab criticized them too. They, of course, handle retail trades, saying that they are concerned that individuals might not get a fair shake in the outcome of all this.
So overall, as of now, they're calling it human error. You might think that's sus. You might not think it's sus. I personally do. The one thing I want to add on to all of this is we know all the halts came at 9:30 and 15 seconds. You might be wondering why that? Why is that when that all happened? Well, if you look at the limit up, limit down rules on the New York Stock Exchange, whenever it moves too much, too rapidly in too short of a time, it has to stay above the price or below that price, like those bands that move with it for volatility, for 15 seconds. So basically at market open, it was already there. And then as soon as that 15-second timer went off, because it was outside of those volatility bands, that's exactly when we saw roughly 80 different equities, circuit breaker halt. And then that was the prompting of all this pandemonium that we're seeing now. So the biggest update we're getting on it is human error at the New York Stock Exchange. It was their disaster recovery system that actually led to a disaster. And right now it looks like they're going to end up busting quite a few trades. They just mentioned that there was over 1,100 trades. I don't know how many of them are going to be busted, but it looks like the NYSE is going to be on the hook for paying whatever damages are involved in this. Obviously, absolutely crazy story. This is not something you see on a common basis whatsoever in the world of stocks. I would love to get your thoughts. Let me know in a comment below.